Hello, traders. FX Pip Collector here. Today is Friday, January 31st, and this is my morning video where we like to take a look at the US dollar pairs, including gold, and we also take a look at a few of the JPY pairs. If you haven't done so already, definitely make sure you check out my free Discord trading community, 100% free to join. The link for that is at the end of this video down here in the corner, and it's also in the description of this video. If you'd like to gain access to my membership, where you get access to all the benefits listed down here below. You do so by signing up at my website, fxpipcollector.com, and it is only $30 per month. So, anyways, first thing first, I always like to check out the news calendar every morning so we can be aware of what the news is going to be for the day. We got Canadian GDP today, which all by itself is a pretty decent news event. But I'm sure most of you know there's a lot of drama going on between Canada and the US right now with those tariffs. Canada is threatening to tariff the US maybe possibly February 1st, which is only tomorrow. So there definitely could be some big moves on the Canadian pairs because of that. And then also we got PCE for the US price, core PCE price index, and we also have unemployment costs for the US today. So we have some pretty decent news today, and plus with that Canadian drama going on, you never know, there could be some really big moves in the market. So, anyways, I like to start off by looking at the US dollar index because that's kind of the roadmap to help you trade all the dollar pairs. Now, we do have a break of structure to the downside on the dollar, so the trend may have turned back down. And the move down to me definitely looks like a trend that's almost perfect five waves, which is why I still think this move up right here is a correction to this move down. Most corrections do take out structure from the previous trend, which we definitely have not done so yet. So I'm still expecting more upside on the dollar. I still think we're going to go up to at least a 50 or to 61% minimum before we possibly go down for either a big giant wave 3, which would be real nice, or possibly just an ABC correction to the uptrend. Either scenario, let's start off by looking at the euro dollar on the daily. So we have to take the information that we learned from the dollar index and we literally apply that to every single one of these dollar pairs except for maybe gold. So, in a ways, the euro dollar has been going down pretty steadily all week long for the most part. We definitely got what looks like a very clear five waves up. Just like the US dollar index, I'm expecting this move down to probably be a correction to this move up. But I'm also expecting it to go down a little bit lower. I don't really think that we've completed this correction yet, in my opinion at least. Taking it down to the 1 hour time frame, if we zoom out a little bit and we look at this move down, to me, it definitely looks like five waves. It looks like a possible wave A. Definitely looks like it made three waves up, possible wave B. Now, we already have a little bit of a five-way pattern, but it looks way too small on the daily time frame to be complete in my eyes. I still think that it's going to make its way down to one of these lower fib levels and possibly even go a lot lower than that. So I'm definitely still on the short side. I'm definitely still looking for shorts. But while I'm looking for shorts, I am also paying very close attention to these Fibonacci retracement levels. If we get like a double bottom break of structure to the upside at a Fibonacci level, I definitely will stop looking for shorts, start looking for longs because that's probably the end of a wave B or the end of a wave 2. Either scenario should make for a really nice long opportunity. Moving on to the pound dollar. The pound has actually been quite a bit stronger than the euro this week. It made the same move down as you can see, but it much weaker to the downside. You would kind of expect this to go down a little bit more, um, maybe to like the 38, 50 to 61%. So I'm definitely still bearish as of now. One thing about the pound dollar is it never really did make an engulfing move down. So the trend is technically up. And if the trend is up, then I would always suggest looking for longs. And if you look for longs and it does go up and make a new high, then that's actually great news for you. So going down to the 1 hour time frame, like I said, if it had broken structure to the downside, it'd be a different story to me. I would definitely be short and I'd be looking for shorts. But on the daily time frame, it hasn't been able to break structure or make an engulfing move down yet. So I'm not short on this because of that reason. And I would not be surprised at all if it actually did go up and take out the previous highs. And it would actually make more sense for the pattern for it to be a 1, 2, 3, 4, 5 like that. So because we don't have a breakdown on the daily, I'm still pretty bullish on this. I still think there is a good chance that it might go down and take out these lows, but because it hasn't broken down on the daily, I'm still pretty bullish and I'm not going short because of that reason alone. And because of that reason alone, I also think there's probably a pretty good chance that it might end up pushing up and maybe even making a new high. So moving on to the Aussie dollar, going back out to the daily time frame, the Aussie has been very strong to the downside this week. We have almost a perfect five waves up right here, which is really nice. We have a nice impulsive move to the downside. We are sitting at a Fibonacci level, but because I don't think that the dollar index is finished yet, I would not think that this is finished yet either. So even if it does pop up a little bit, I definitely would assume that it's not over yet, and I would expect it to go down more, maybe even making a new low. Probably not making a new low, but definitely could. And if we're looking for shorts on sort of time frames, it wouldn't be a problem for me if it made a new low, that's for sure. Now, there's really no like break or structure anywheres on here. So for me, this is all just one downtrend. There's none of these moves up ever did break structure anywhere. Now, if it does break structure, then fine. Okay, maybe if you're a scalper, you can try to go long, but more likely than not, even if it does break up, it's just going to be a correction and it's probably going to go down again. And the reason why I believe that is because of the US dollar analysis that I started off with. If you know what the US dollar is doing, then you pretty much know what all the US dollar pairs are doing, except for maybe gold, because gold doesn't really care about the US dollar. So I am only focused on shorts. I have no desire to go long. I would be looking for shorts at the end of every single pullback I see, trying to take it down to a lower Fibonacci retracement level. Going back up to the daily time frame, I don't really analyze the Kiwi dollar because it's exactly the same as the Aussie dollar. Moving on to the US dollar CAD, like I said, we do have some Canadian news today, and we also have a lot of drama going on with the US and Canada right now because of the tariff situation. So to me, this daily time frame definitely looks like a one, two, three, four, five. I mean, it totally looks like a five-way pattern. You would kind of expect it to go down and take out structure now that you have five waves. But I honestly would not be surprised if it went up and took out the high of the previous move on the weekly time frame, or if you zoom out on the daily, go up and take out this high over here. So because the trend is up and because there's no reason yet to think that the trend is not going to continue, I would definitely suggest looking for longs on shorter time frames. We had a pretty decent little three-way pullback this morning already. We have one, two, three waves down, go long. One, two, three waves down, go long. Even this over here, one, two, three waves down. One, two, three waves down. One, two, three waves down. So what am I doing? I'm looking for three-way pullbacks to go long. If it does decide to go down and make an engulfing move down or a breaker starts it to the downside, maybe you can start looking for shorts. But since it has not done that and there's no evidence of it doing that, I would continue to look for longs at the end of every single three-way pullback I see until the higher time frames tell us otherwise. The trend is your friend, and the trend is definitely up right now. Moving on to the US dollar Swiss, I did end up going long on the dollar Swiss also. Now, because of the dollar index, I'm still looking at this move up as possibly being a correction to this move down. And also, this is a nice little five-way pattern to the downside. So you would kind of expect this move up to be a correction to this move down. So if we do get a pretty significant Fibonacci bounce, then it possibly is going to go down and make a wave C or a wave 3. But because of my weekly and, zooming out a little bit, I still think there's a really good chance that this is going to take out the highs over here. The high of wave 4 has not been taken out. Most wave A's, wave 1s do take out the high of the previous trend, which has not happened yet. So I'm long already, and I'm kind of hoping that it's not a correction. I'm hoping that it just keeps on drifting up, taking out these highs before it actually turns back down. So let's take it down to the 1 hour time frame. So we are sitting at a Fibonacci level, and if it does break structure in a big way to the downside, then you can definitely think about going short. Because like I said, there's a good possibility this is an A, there's a good possibility this is a B. So if you get a Fibonacci bounce, if you get a very significant break of structure at a Fibonacci bounce to the downside, then you could turn into a seller from that point on. But in my opinion, I would be very cautious about selling because the higher time frame is definitely in an uptrend and the US dollar index is definitely going up, and the trend is your friend. If this goes down, I would be assuming that the move down is another correction to the move up unless you get a nice significant break and hold below structure. So let's move on to gold. So gold did end up breaking the previous highs. It ended up breaking that 100% Fibonacci extension. It doesn't really change the pattern for me though. I mean, wave B's definitely can take off the previous highs. And it definitely still looks like a three-way pattern to me. And now that we got that last little push up, I mean, it definitely still looks like five waves. But one thing is that now that we passed the Fibonacci level, I kind of expect it to go to the next Fibonacci level, which is right below the 2820 area, maybe 2810 area. So I think there's a good chance we got a little bit more up. But I am definitely keeping an eye on this because if it does turn down, if it does break short, so I definitely want to get short because that is going to be a big move down. But because these higher time frames have not actually turned down, I would definitely recommend looking for longs on shorter time frames until we do get to turn to the downside. Moving down to the 1 hour time frame, I mean, this move up was very sharp, and we had our Fibonacci retracement on here. And in my video, I said if it breaks down at a Fibonacci level, then I would consider going short. But it never broke down. There was not one time in this move up right here where I would have said to myself, "Oh, yeah, that's breaking down." It was a very strong move up. No engulfing move, no breaker structure. I personally would definitely still suggest looking for longs because our next Fibonacci level is right around the 2810 area, which is still quite a ways up there. So I'm definitely still looking for longs. Unless the higher time frame tells me otherwise, I'm looking for longs, thinking that we'll probably go up to at least the next Fibonacci level. So let's take it down to the US dollar yen. Now, the US dollar yen and all other yen pairs, I actually think it's already going down for a big wave C on the weekly time frame. This is definitely in a downtrend. If it breaks above this, then okay, fine, I'll look for longs. Otherwise, I'm definitely looking for shorts. I've been saying that for days now, and anybody that's been following along, you find that having some really nice trades now because we had a really nice little push down yesterday that was a very tradable move. We are sitting at a fib level. If it goes up and breaks structure, I would become bullish. If it doesn't go up and break structure, I would just look for at every move to the upside as impossible. Now the correction to the downtrend. So going down to the 1 hour time frame, I do think there's a good chance it might drift up a little, but I have no desire to go long unless the higher time frame breaks up. Actually, to me, it kind of looks like a possible ABC. So if you see something like this and then you see something like that, that would be the trade that I would be focused on. Just because I drew this going up a little bit doesn't mean it's going to go up. It literally could just go up a little bit and go down. That's why I am not looking for longs, and I don't suggest looking for longs. When all the higher time frames are in a downtrend, even though I sometimes draw a little push up, that doesn't mean that I'm going long. That just means that if it does this, and then if it does that, I will be looking for shorts, and I will go short, potentially for the continuation of the downtrend. So moving back down to the euro again. The euro again, we still got our Fibonacci retracement on here, but I mean, at this point, I think that even if it does make a bounce, it is very, very likely going to make a lower high, and it's very likely going to go down probably quite a bit more, because I personally think that this wave B is likely to already be over. So anyways, taking it down to the 1 hour time frame. So we definitely do have a little bit of a bounce right now, for sure. But I definitely would suggest not looking for longs. Even if it does bounce up, I wouldn't go long. I would be looking to try to go short at every single bounce I see. So unless the higher time frame gives us a reason otherwise, I would be highly focused on going short at the end of every single three-way pullback I see, especially on these shorter time frames. I really highly suggest trading with your higher time frame moves until the higher time frame moves tell you otherwise. So moving down to the pound yen, back up to the daily time frame. The pound has been quite a bit stronger than the euro in the past week or so. But the pound dollar also, the pound yen also did break down. And I'm thinking there's a very good chance because of all the other yen pairs and correlation between all the other yen pairs that this is just going to keep on making lower lows, lower highs on the daily time frame. It's going to be lower low, lower high, lower low, lower high, lower low, lower high. That doesn't mean that it possibly might not make a move up for a day or two, but I think it's very likely to continue that low high series. So going down to the 1 hour time frame, keeping that information in mind, I would definitely suggest looking for shorts in a downtrend. Yes, we did make a pretty significant bounce, but that doesn't mean that it's going up. If anything, I would like to see a three-way pullback, just like I would be focused on going short here and there and there. Now I would be looking to try to go short here at the end of a three-way pullback, hopefully for the continuation of what I think is a big wave C, probably a big wave C of wave 4 on the much, much higher time frames. So anyways, don't forget to join my free Discord channel, which is linked down here in the corner. And as always, thank you and happy trading.